Good morning, good afternoon, and good evening. Thank you everyone for joining us today for our webinar entitled How to Modernize Your Tax Processes and Keep Pace with Regulatory Disruption. My name is Sarah Sternberg and I'm a Partner Marketing Manager at SAP. I'm pleased to welcome our partner Thomson Reuters as our presenter today. Our speakers Rick Pater and George Compton will be joining us. Rick Pater is a systems consultant at Thomson Reuters Indirect Tax Group. For the last 7 years, Rick has worked at Thomson Reuters in the engineering group focused on development of their tax engine integrations into SAP for global VAT and sales tax calculations. George Compton is a senior systems consultant at Thomson Reuters Indirect Tax Group and started in early 2013. Since then, he's been providing insight into tax systems, integration, and best practices for many corporations looking to improve their tax determination and compliance. Before I pass it off to our speakers, I'd like to cover a couple of housekeeping items. First is that Q&A will be addressed at the end of the webinar. For any questions that you have at any time during the webinar, please submit them in the Q&A box. If we aren't able to address your question at the end, we will follow up directly with an email. The webinar is being recorded. All attendees will receive a copy of the webinar following today's presentation. And with that, I'd like to pass it off to Rick. Thanks so much for joining us today, Rick.
Thank you, Sarah. I'd like to read this quote here first. It really says it all. It's easier to tax the transactions that create the outcomes rather than the outcomes themselves. This is a quote from Grant Thornton in an Indirect Tax Guide article that they had from 2018. And what it's saying is that more and more countries are using indirect tax for their income needs, realizing that it's much easier to control that outcome rather than indirect or direct tax, income tax, in that you're doing it at the time of the transaction. There's better control and less adjustments through the month-end process. I'd like to talk a little bit about the pace of change. On our first note here, more and more countries, like I said before, are recognizing that indirect tax is a far more reliable and controllable source of income than indirect or direct tax. So more and more companies or countries are realizing this, and they're making changes to their tax rules and rates and reporting for that. A prime example of that is Brazil, and many of these countries are looking to Brazil for answers in regards to how they're doing it. As electronic reporting of invoices is becoming more and more popular. So with more of these changes to tax law, the larger the country base that you have as a company, the larger the risk and the need for automation updates. Also, leveraging the content of a tax partner, such as Thomson Reuters, would reduce your redundant internal tax research. We're doing the tax research ourselves, so you're getting top information as tax laws change, and that is automatically added to your tax system. Using a global integration approach is also valuable. If you were to use a tax engine and use it for all of the countries that you're involved with, you've got one database with access to all country activity. It provides greater visibility and a central point of truth for all of your tax information. Significantly improves the corporate-wide internal management reporting as well. So for this, you've got all of your information in one spot, so it's much easier to do strategic planning and budgeting using that information. I'd like to talk a little bit about some trends in the marketplace and what we're seeing. The first one being that countries are increasing their VAT and GST and sales and use tax rates. So in order to provide a more reliable source of revenue. Secondly, the Wayfair ruling is also an important key trend that's happening right now. With the Wayfair ruling, nexus situations are not only at a point of residence within a given state or country, but it's also at the number of transactions or activity that you have. You may not have an actual place of business there, but if you're selling into that state, after a certain level, you're going to have to start collecting tax. Digital reporting is also on the move. More and more countries in EU are following that. So this is going to require more reporting at time of the GL post of the transaction and e-invoice clearance, etc. Greater adoption of cloud solutions also is coming into play. And with that, international companies or countries are requiring the hosted environment to sometimes be within their country or in the example of the EU. So that means that providers need to be more flexible on their cloud cloud offerings. On our next slide here, believe it or not, tax is the third largest cash flow. And this is according to a KPMG article back in 2015. It's the largest cash flow or turnover in most companies, as you're paying those taxes earlier than you're actually getting the receiving of that payment in from the vendor. Also, 58% of companies say that indirect tax has a negative cash impact on them, on their business. And on top of that, 76% of large companies plan to invest in tax technology. This was back in 2015. I think you're going to see that that number is even higher today. Impacts on your business by not automating tax. Well, let's take a look at a few of those. If you pay too much tax on purchases, it's a lot of wasted money. Tax refunds are costly. Income tax accounts for incorrectly accounting for tax on VAT and GST paid. You're going to overpay VAT on the return. Fail to account for use tax on purchases in the U.S. This is the leading source of penalties and interest as auditors are looking for cases where we've not accrued our own use tax. Invoice reconciliation issues. You could end up spending more time trying to reconcile and miss early pay incentives that your vendors may be offering you. Supplier relationship troubles, that can happen too, as you have that churn of correcting invoices, etc., supplier frustration and conflict. And last but not least, by not automating your tax system, well, you will make more friends. And that, of course, is because tax auditors will be dropping by to visit you very often. What is a tax engine? It's a large program, runs continuously in the background, and receives requests for data from your ERP system or other systems of record where tax is needed. It then sends that information to the tax engine, and the tax engine does your calculation. It then responds with a call back to your integration or to your ERP system and sends the tax back to the document. It contains all of the tax rates and rules and products and the logic that is applicable. So it's all in one central place. You're not storing rates and rules within your ERP system. It's all date-driven and stored in the tax engine. So as requests are made, the taxability date of your transaction is used to calculate the tax at that time frame. And the engine stores all of that past history. It's also able to be configured and tailored to meet your specific company's needs, your tax policy. All of the items can be mapped as far as products and product codes to the tax engine, and rates and rules can even be customized based on your needs. All rates and rules and policy are stored in the engine. And as I mentioned before, it's date-driven. It also can work with many various systems at the same time that you have connected to it. The tax engine can support calls from many different ERPs, point-of-sale systems, etc. at the same time. One tax engine to supply all of your needs. It also contains a database of all the history of your reporting and compliance needs and your transactions, so that reporting tools and compliance tools can be used on that data to support all of your downstream tax filing requirements. It keeps track of exemption certificates. There is a module for that. And it also keeps track of them and allows you to add new exemptions, track when they're due for renewal, and to be able to communicate with your customers and let them know when updates are needed to their exemption certificates. There's even a portal that can be used so the vendor or customer can log into the system and update that information themselves. And as I mentioned before, it can send and receive tax data from any ERP system or application. Various integrations or APIs that are available. It also can reside on the cloud or on-premise. It dramatically increases the accuracy of the calculation and significantly decreases time and resources needed for tax reporting and compliance. Another thing to consider, tax engines require an API or an integration point that's used to connect between your ERP system and the tax engine. This can be done for any ERP system, apps, point-of-sale system, etc. Some of the newer integrations or API tools can be modernized to provide menu-driven, flexible setup, configuration, field mapping, etc. They can significantly reduce the implementation and time needed for maintenance and processing time. It also can dramatically reduce the amount of IT programming time that's needed. A lot of this can be done through tools that alleviate the need for an IT programmer to be in the system and hard coding logic or mappings. So such tools can really reduce the overall cost of ownership at all phases of your system. Implementation and setup, the daily transaction processing that's going on monthly, and ongoing support and maintenance. So we have an integration or SAP tool for integrating to SAP. We also have API tools for a number of other systems. This could even be a proprietary or homegrown application. We have tools that will work for that. One we'd like to talk about today is our partnership with SAP. And with that, the integration that we assisted them with on Ariba. So now I would like to turn this over to George, who will be talking further about the Ariba integration that we have available with Ariba's API.
Yeah, thanks, Rick. It's a good recap of some of the regulatory disruption and what a tax engine's for in general. And as you mentioned, what I'm going to talk a little bit about is specifically our integration and working with the SAP Ariba solution. And if you look at the left side, one of the important things to take away is that we can integrate many different transactional systems, SAP's S/4HANA, as well as ECC, and all other kinds of transactional systems that may be requiring a tax call. But if we take a look at the middle one, the SAP Ariba, the integration will actually create a real-time call to the tax engine. So it'll grab all the information that's required for the tax engine to be able to make that call. And it could be regarding a requisition, or it could be actually at the invoice level. Either one's going to make a real-time call to the tax engine. It's going to do the calculation within ONESOURCE, and that's going to be using all those rates and rules and logic and borders to find out what is the correct tax. Once it understands that, it's going to send the results back to SAP Ariba, and this will be done in real time. This will take anywhere between 50 and 200 milliseconds, so it's sub-second response that you're going to find out what the true tax should be. And at the same time, what we do is we write it to the audit database in our system, right in our cloud, and we can then support the process of tax returns. So you can do reporting against it, internal type of analysis reporting, as well as being able to use that data to go right into your returns. We take a look at specifically for Ariba. One of the things is that we co-developed this with the SAP Ariba development people so that it can sit inside of Ariba to make this tax call. And it is certified by SAP Ariba to say that, yes, this is a proper integration. Of course, the intelligence comes from the ONESOURCE tax engine, meaning we're taking a look at over 190 countries around the world for any regulatory changes, and we're automatically updating them to be available for any transaction that you might put through the system. And we do this in our research by some very strict procedures, and in fact, they are certified with the international code of how to proceed through these updates to make sure that they are accurate. So you can be safe in saying that you're going to get the most intelligent tax calculation, the most accurate tax calculation based on the information the countries and the states give to us. And it is powerful, right? It's unparalleled support for managing tax on sometimes very complex spending. When we talk about the purchasing side, there can be many different ways the product is taxed or service is taxed because of the way that it's being used. And so part of our integration will help with that process. By the way, we are the only tax vendor that received SAP's Pinnacle Award, and SAP gives that out for innovation in technology to their partners. And we not only won it once, we have won it twice, most recently here this year, for our integration with Ariba. So let me take you on a walkthrough of how it actually works within the cycle, the P2P cycle, using Ariba. If we consider the first step is someone needs to buy something, right? So they're going to put through a requisition. One of the things we'll do is we'll call the tax engine. We'll say, what is the correct tax for this particular purchase? Tax will come back, again, sub-second response. The person will then know how much their total spend is, right? A lot of people have budgets. They need to stay within those budgets, and if you're not using the tax engine, sometimes you can forget about how much tax is going to be impacting that budget. So what we do is we make sure that you have a full landed cost of what it's going to be for that purchase. Once it gets approved, we're going to pass it through to the purchase order. So whatever tax was on there, when it gets approved, it'll be passed to the purchase order. We're going to give it to the supplier so that they have a heads up. They know what we're expecting the tax should be. Of course, goods receipts happen. It really has nothing to do with tax. But then we get down to an invoice coming in. So now that we've received the goods, they send us an invoice. We need to make sure they're not over or undercharging us so that we don't have any exposure. We'll call the tax engine again. Make sure that rates haven't changed or something about the product or service hasn't changed, and make sure that we are being invoiced the correct amount. We'll also help with the reconciliation process, all right? So as we get, perhaps there is a difference between what the vendor charged and what we should have been charged. We'll help you through with that reconciliation process so that you can then go ahead and write it to the OK to Pay import file. This is what actually goes back into whatever your accounts payable system is so that you can then pay your vendor. But during that reconciliation process, one of the things we also do is record it back to the audit database. Remember I was talking about within ONESOURCE, we do record those transactions to help feed the returns. So we need to know exactly what was the correct amount and what you decided to reconcile to and how much you really do want to pay the vendor so that we will know what those amounts are. So what are we trying to accomplish, right? Let's get tax right the first time, every time. That's what we're trying to get to. Why? Know what the total is before you issue the PO. Tell your vendor, this is what I expect, right? Let the supplier know, this is what you need to send me. If you're not using a tax engine like ONESOURCE, make sure that you're matching up with what my expectations are. Am I being overcharged? You know, if I have to overpay it, it's really difficult to get back that money. You know, if you're down the road and you're trying to, you know, recollect it from your vendor, that money's already gone. Same thing if you're underpaying, you're exposed to penalty and risk, being audited and having to pay that penalty and interest. So we want to make sure we get it right the first time. We also want to avoid having to go back, look at the invoice after we've paid it and try to reconcile and match things up and take credits and whatever it is. If we can avoid that thrash, now we're being more efficient and we're getting it right the first time. So I also just wanted to point out, we're always improving the product. As you know, we get feedback from customers, from the field, even new prospects are asking for certain enhancements. One of the enhancements is coming out here at the end of the year to improve the vendor charge tax logic and be able to do a better job of self-accruing. Also, and the first quarter next year is when we'll be writing back those changes to the audit database. So we're always moving it forward. We'll have we'll have an extra release of some API improvements and it is currently targeted for mid first quarter. So really, just to summarize, let's get tax right the first time, every time. Why do we have to go back? We don't want to go back and try and figure out where we went wrong. Let's stay ahead of rapidly changing tax rates and rules. There's a lot going on in the United States as well as around the rest of the world, so we help you stay ahead of that. And a modernized tax process reduces administrative and IT time and costs. We take that burden on, keeping up the software, keeping up the hardware that needs to be done. So it reduces the amount of IT involvement. So just to wrap it up, if you would like to contact us, here's our phone number, email address that will get you to someone that can help you. And go to our website. Take a look at our products, not only Arita, but any of our other products that can help with your tax needs. So I'm going to turn this back over to our moderator and see if we can open up for question and answer.
Wonderful. Thanks so much, George. So with that, I've been tracking the Q&A in the background here. If you have any additional questions that you'd like answered, we'll try to get to them in the next 5 minutes. And anything we don't get to, we'll make sure that that Rick or George are able to follow up with you after. The first question here is from Dave. He says, we usually have to select the correct tax code to match up with our ERP system. How does this work with your Ariba integration? Dr. George or Rick, who would like to address that first question?
Yeah, this is George. One of the things that we do within the ONESOURCE tax engine is we're able to preset what the tax codes are based on the conditions of the transaction. So it makes it easy to be able to get the right tax code that you're going to send back to the accounts payable system because you don't have to worry about it. You don't have to select it when you're entering an invoice or reviewing an invoice. The system is preset to change the tax code behind the scenes and get the right tax code that'll match up with your general ledger.
Yeah, that's
Wonderful,
an incredible. That's an incredible benefit that you don't have to have your AP person memorize or have cheat sheets for all of these tax codes. They're using one tax code as a driver on the AP that just basically makes the call to the system, and then the system brings back the correct code.
Great, thanks. Okay, let's move to the next question. So we have another one here from Karthik. He says, is the Ariba integration available as a cloud-only deployment, or can it also be sold as an on-premise deployment?
This is Rick, and yes, it can. It can be either on-premise or it could be supported in the cloud. Our tax engine would also be available both on-premise and in the cloud. Most of our customers are going cloud-based now.
Wonderful. Okay, let's see what else we have. So we have a question from Tracy. She says, is there an industry or specific set of industries where these tax issues are more prevalent or more critical, or are all companies, regardless of size or industry, up against these challenges?
Hey, George.
Yeah, this is George.
Tackle that one?
Sure, yeah, this is George. It really is applicable to all industries. Everybody has to buy stuff, right? It's not specific to any one industry. Even when you get into banking and financial companies, they may not be selling things, but they have to buy things just like everybody else, and they're using tools like Ariba to do it. So also from a country level, there's the complexity. For the EU, complexity in many other countries around the world, we're able to help those companies in those different countries as well. We have oil and gas, we have retail content, as well as some telecom, leasing. We work well with the energy industry. So yeah, there are these kind of complications for any type of industry.
Wonderful. I do want to try to wrap it up shortly, but for those of you who have just another minute or two, I'm just going to go through 2 more questions. And then if there's any additional questions at the end, there's a Contact Us button at the bottom of the webinar page. The email will be sent through to me directly, Sarah Sternberg, and I can connect you to our speakers. Let's do 2 more. I have a question here from Parthipan. If my supplier doesn't charge any tax, do I have to manually tell the system to use the tax engine calculated amount?
Actually, no, this can be automated through SAP Ariba. You can set configurations in the system that can automatically accept the tax engine calculated amount. If the supplier didn't charge tax, you can change it to the amount that was calculated, and also set up adjustments for self-accrual of tax. With the Ariba system, we have 2 new releases that are coming up. We're working with SAP again, and with that, they are developing an API 2. At best guess at this time, it should be coming out in February. And we will have an integration with that will greatly improve the connection to the tax database, so that your items from the OK to Pay file will go into our audit database easier for reporting purposes downstream. We also have a release that should be by the end of the year, I think November, that will specifically make some improvements to this vendor charge tax logic that you asked about. So watch for those notices when they come out in the next month or so. Thank you.
Okay, and I see a few questions coming in here. We're just going to answer 1 more and then follow up with the rest via email. We're also planning to put together a Q&A sort of style blog or handout that we'll be happy to distribute after. So final question, do you support tax variance tolerances?
Yes, tolerances can be set as a percentage or as an amount in the system, and then if your tax that comes back, it's compared to the tax engine amount. If it's within the tolerance ranges that you've set, then it will automatically be approved and go into OK to Pay status. If it's over the tolerances, then the vendor charge tax logic would kick in, and you have the ability to make those decisions.
Yeah, during this, George, and during implementation, you'll maybe set those tolerances wider to catch the big rocks, and then tighten those down, so you can change them as you go along, and you know, make it even better. Yep.
Wonderful. Thank you both, Rick and George, so much for your time today, and thank you everybody for dialing in. If you have any questions, like I said, don't hesitate to reach out. We will be in touch with a short follow-up within the next couple days. Again, thank you so much, everyone. And with that, we will end the webinar here.
Thank you. Bye.
Thank you.